everybody. Thanks for coming to tonight's class. It's nice to have all of you guys here. As you know, my name is Jeff Kilian, and I'm happy to have you here. I'll also have the honor and privilege of reading a legal disclaimer for you today. So thanks for coming. Let's go ahead and get going. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters and Inside Technician shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. You know I like to keep my lawyers happy, and that does. So let's go ahead and go to the next slide. Today we're going to have a very special guest. This is a person that we've been working with probably since about February or March, I want to say, of this year. He's somebody that is a very, very thorough trainer, and he likes to educate people in the world of trading. He's somebody that I would say definitely gives a lot of one-on-one support and one-on-one attention. And he's definitely somebody that knows what he's talking about, has been doing it for a long time. And I've never, actually, we've had him in the classroom for one other time. I was out of the country, so we had somebody else host him. But I hear he gives a very good presentation as well. So I'm excited to hear it. I'd like you to welcome him out. And I'm going to get out of the way, as they say, and let him do his presentation. Jeff, are you with us?
Okay, can everyone see my screen okay? Yes. Okay, excellent. Thank you, Tony. Okay, let's begin. Welcome to the special presentation, the Metastock Inside Technician.com special presentation, where the webinar entitled The Secret to Trading the Smart Money is here. Before we begin, I want to thank everybody for taking the time to be here with us tonight, for taking the time out of your busy schedules to sign on with us with the expectation of learning something new. And that something new should always be what you can take from it and immediately incorporate into your current methods to become a more profitable trader or investor. My name is Jeff Kilian. I am the founder of the InsideTechnician.com. And about 16 years ago, I became seriously interested in learning how to trade stocks. And I went through a 3.5-year self-directed study tenure with some of the best traders worldwide to be able to land as a real-life profitable trader. Now, what I had to go through is something that most people wouldn't, but fortunately, the game has changed, and the game has changed in your favor to really learn how to become a real-life profitable trader. This company was founded with one goal in mind, and it's to teach you the correct application of technical analysis, enabling you to become a real-life profitable trader. Here, through the process of developmental training, we really level the playing field, and it's done by providing a fully transparent environment where you, the client, follow a structured, learnable, and repeatable process, giving you the necessary skills to trade like a professional. We're talking about a structured, learnable, repeatable process using time-tested indicators that worked 75 years ago, 50 years ago, 20 years ago, 5 years ago, and a couple of weeks ago on my most recent profitable trade on TKC that brought me in 8.5% in just a few trading days. So what I'd like to do is I'd like to talk about how to find, track, and trade the smart money. These are the people who actually move stock prices and have a vested interest in making sure the profits are realized in a short period of time. I'm talking about the people who actually, again, move stock prices, the insiders, the pension funds, the institutional people, the offshore hedge funds, investing hundreds of millions of dollars into positions to be able to realize a profit in a short period of time. Your foundation of profitable trading on your screen really is learning the correct application of technical analysis, because it discounts what the fundamentals are saying. Everything that's on CNN, Yahoo, Google, all these informational services that you're paying hard money for are all geared to confuse you and take you off course. The correct application of technical analysis has direct profitability to stocks, options, futures, forex, ETFs, market traded funds, whatever you want to trade. So what we need to do is we need to match and model the superior methods of a professional trader to really gain the learned confidence that we need and the positional advantage, so that when the rubber meets the road and the time comes to take the trade, we have the confidence to be able to do that. Now, just as well, when I started the trade, I know that I interviewed a lot of people, and the answer was always the same. We have to develop a trading methodology that will find, track, and trade these people, and use superior risk management to be able to stay in the game month after month after month and continuously make money and outperform the market. So here's where you learn to do this. This is why we have gone through this organization of the developmental training process in the foundations course, to be able to teach you exactly how to do this. So let's get right into the demonstration. And the first thing we're going to go through is a complete walkthrough of the Dow Jones Industrial Analysis, the Dow Jones Industrial Average, and we're going to take a look at how we arrived at where we are today, what's the current state of the market, and what's the real probabilities for future directional price movement. In trading, once your skill level increases and you go through this process, it's very possible to learn how to go short as well as long. I'd like to back up before we talk about what's happened since 8/10 up until the close of the big down day today, and let you know that right at about this point right here, all the indicators that we follow here on the market end were clearly signaling that it was time to go flat or go short. So I'm going to walk you through exactly what I look at every single day when I analyze and trade. The first thing I'm looking at is the volume in the subgraph below as compared to stock prices. Okay, right here we had a substantial area of some consolidation here, an official double top. Prices returned back around and a trend line was violated. Now, looking at that in isolation, it doesn't have any real significance. But when you go right to the advanced decline oscillator, the total sum of all the stocks advancing versus declining, plotted out in a single graphical representation, we can see clearly that at this point right here, we had a substantial negative divergence as compared to prices, signaling that the smart money was leaving and that prices were soon to correct to the downside. Again, this is the total sum of all the stocks advancing divided by all the stocks that are declining, is represented in single graphical form. Now that taken in isolation adds something additional, a confirmation to the trend line violation, doesn't it? So when we look at this, we're looking to gain a real insight. We need to get inside the market and see what's happening, what is ready to take place that the prices are not telling us. So what do? We go right to the money flow index indicator. And I like this because it confirms what the volume has said. Is the volume real? Is it real institutional buying or selling? Is the advanced decline oscillator telling us the truth that the money is leaving? And the answer is yes, because now we have a secondary negative divergence as compared to the price action before, this is the key, before prices fell off. Very simple but powerful indicator. As a technician, we need to use every single time proven technique that we can in order to be able to make the case for being on the right side of the markets every single day when we trade. And this is what we're going through right here and right now. So after the money flow index indicator, what are we going to look at next? I use right out of the Metastock Professional program, the Stochastics Momentum Index. The green line is 21 period. The 3 is in the red, smooth moving average. And I have also created a special 50 level here to determine when we have the more opportunistic points, as in here, to catch this move. And here, again, to spot yet one more negative divergence on stochastics, along with the crossover from above to below. Again, before prices corrected. If you're with me, you can see that we're building a very strong case where a lot of traders are using too many conditions, too many different indicators. So therefore, when the moment arrives to actually analyze and make the trade, to go flat or to go short, it adds confusion. And when trade day comes, they don't have the confidence to put on the position and make the trade because they have too much information in front of them. So let's continue to follow the handful of the best indicators that we follow every day to trade. And the next one is the MACD indicator. I use the defaulted parameters right out of the program, 26, 12, and 9. All of you are familiar with this indicator, so there's no sense in going through a lengthy explanation, but we did have a almost flat line, a very weak but still negative divergence as compared to the price action. Unlike the others, but flat. And here's the key. We had the crossover from above to below right here and downward momentum before prices tanked. Signaling that what? The trend had changed. Things were going to tank and people were going to lose a lot of money, and I know a lot of people did. And I'm sorry that they did. But you know what? It wasn't necessary. It could have been avoided. And more than that, you could have gone short like we did on our end. And the final thing I want you to see that I look at every day is a pair of 4- and 8-day exponential moving averages. The cross was right here on this day, on 7/26, the day before I shorted the S&P 500 and caught this move from here to here, out this day and back down here, and we pulled in over $175,000 in about a week. How profound is that? It's almost incredible. Just by following a sequential qualification order to be able to qualify the reality of what we're looking at. It was very simple and clear and concrete to be able to see that this was going to happen. Now, something I'd like to share with you that a lot of traders don't do because they feel that, well, there's nothing going on and they can afford to take some time off. I know 2 traders personally that at this area right here did not know what was happening. And the only reason why they didn't was because they weren't paying attention every day. So when you go through this process here with us, one of the strict orders that we always issue is that there are no vacations in trading. Not if you plan to make money, make it a business, and be serious about it. Because last summer, we had some of the most profitable trades in history because the markets were moving in our favor. This major market correction right here brought in one of the most profitable years I've ever had in trading, and I've been trading every day for 13 years. And those returns are between 150 and 200% every single year, no matter what the market is doing, following the smart money methodology. So that pretty much concludes the analysis of the market correction. Now, where we are today, from this point forward, 8/10 up until today, there's been a lot of volatility. And for those of you that are new to trading, volatility is a measure of market variability. And that variability is always gauged by the size, the range of the days from the past to the present. Low volatility here, low volatility here, but look what happened here. More than 2, sometimes 3 times the average daily range here. So if any of you have followed my previous Inside Market Analysis bi-weekly webinars, you know that I demonstrated very well using Fibonacci, more or less within very close proximity where the markets would stop, find a new base formation, and move from that. And it was right about this level, only on the S&P side, but it was very close to here. But today, I want you to see how we use Fibonacci to be able to determine future price levels that the market, groups, sectors, individual stocks especially, get magnetized to. And so what we do is we use Fibonacci, and out of them, all the techniques that are available, I believe that way back when I did more research with Fibonacci than anyone else I know. Now we're going back 16, 15 years. And at that time, I probably spent 3 months every night studying this technique. And I know from experience, and what we teach here is that we have to connect the correct data points. And so it is here, and it is here from open to close, or close to close, the bottom and the top of pivot point high, pivot point low. Now remember, everyone, at the time, this was all we had. There was no price movement in the future because there was no future. This is exactly all that there was. And as every day went by, we're looking to see where prices can get magnetized to in conjunction with the other indicators that we're looking at. And what happened right here on 8/15, the close lined up exactly with 38.2%. And as we moved on, the open of the very next day was at 38.2. We move forward in time. Here on 8/23, the close lined up with 23.6. We move forward again, up move, and right here, these twin highs lined up exactly at the 50% level. Now, that's more than a coincidence. And the reason why it's more than coincidence is because the laws of nature have direct application to trading stocks, futures, options, ETFs, whatever you want to trade. And this is how a technician sees it. Now, at this point, right here, since we did not go back to a 0% retracement and a new up move, prices tried to get through this 38.2% level again. And this volume here, based on the indicators again, which I'm going to run through real quick before we get into a single stock presentation of an actual stock trade taken by myself. Everyone, including myself, for a very short period of time, thought that this volume was for sure accumulation. And we were going to continue this up move. But you know what? It couldn't break through this level. And this level was also compared to this level. So with this 38.2% retracement level, we wound up with superior resistance on the Dow side. And once that resistance level was hit, and only a high of this day tested it here, and we couldn't penetrate this and close above here and get to 50% again, we knew at that time there were high probabilities for a market sell-off because prices were not continuing to move up. And that's exactly what happened. Here we have 1, 2 days. And today, at the close of 9/22/2011, we wound up at 10,733 for a downward move of 391 points for a down percentage move of 3.51% in one trading day. And where did we end up? Just about exactly a few points short of the 0% retracement level right here, with a test of this low now as compared to this previous low here. These price points are just about exactly equal, as you can see that. So let's move on to these other indicators so you can see what else I'm looking at and how I lined up a trade that I make. At this point, the advanced decline oscillator was positive. So there were stocks that were advancing more than declining. But on what? Inflated highs. Not on real insider money. Here, we had the MACD that was starting to go flat. Okay? It bounced off of here, but we couldn't get any higher at this point as compared to this previous price chart pattern here. That signaled weakness. Here, we have the money flow index turning back around, signaling money was leaving before these 2 days when we lost about 6%, 2 trading days. Incredible. What an incredibly powerful indicator to tell you the reality of what's happening besides the price movement. Here we have stochastics again, and we have a crossover from above to below at this level right here before the move down. Well, again, I'll lay out Fibonacci here for you real quick so you can see an extended view of this right here with no volume in the subgraph below. Right there. There it is. Lined up, here, right before the sell-off. Couldn't get through 38.2%. There's your demonstration on the market side. Now, tomorrow is Friday. Prices hold here. We'll have something to work off of. If they hold here and move up, we'll have an official double bottom to work from as a new base formation in anticipation for a developmental move to the upside. What we need is serious accumulation to the upside with the indicators going back into positive formation to tell us that this is real accumulation and not a mix of accumulation versus distribution. It is real money that's coming in, and the markets are going to start to move up. If tomorrow and next week it crosses below this line and continues to move down, it's a signal that we are completely flat. We are out of all trades unless you're a short seller, and you're going to wait until the indicators line up again and show us that we're clear to be back into the market if we want to be long. The beauty of the methodology that I'm going to go through in a single stock trade is that even though we had this trading range largely from 38.2 to 0, from roughly 11,500 to 10,700, we made a lot of money in between this area right here. And how? By knowing how to use the correct application of technical analysis to be able to determine the true high probability trades. And so let's move into that demonstration right now. Just bear with me a minute. I'm going to close screens here. Okay, what you're going to see is an actual complete walkthrough of a recent profitable trade that was taken by myself. The symbol is TKC. It's an ADR, a communications company overseas. And the gain on the trade was 8.5% in 2 trading days. A gain of 96 cents. The total amount of shares bought between 2 different buys was 13,100. And so the profit became $12,576. I made hard money in 2 trading days. Now, usually our hold times here are 3, 5, and 7 days, and there's good reason for that, and we teach you exactly why here. And the reason is, I got out of this trade here after I entered right here on shortly after the open on a short-term intraday correction here, because of the gap away. Now, there's a lot of talk between traders and statistics that are out there that say 70-75% of gaps are all closed. I believe it's more like 90%, close to 90%. So full well knowing that, along with the weakness on the indicators, on the intraday live real-time charts that I follow, the 15-minute, 5-minute, 1-minute charts, I decided to get out of this trade, lock in a profit, because I knew that very shortly I was going to probably have to give some of that money back. So when we talk about trading the smart money, we're not only talk about how can we find these trades by using a specific methodology, but how can we also protect our capital? How can we get those risk-to-reward ratios at 3-to-1 or better so that we have everything lined up, but we also have the right risk-to-reward ratio. We also have the kind of trade that if it goes against us, we can lock in a profit. Or If it doesn't go anywhere, we lose a minuscule amount of money, next to nothing, like 0.5% of our total in. And this is the thing that guarantees your longevity as a trader. Because on one of the last IMA webinars, I talked a lot about risk control. So we keep our stops far enough away that we don't get stopped out by daily volatility within some of the most recent days' price action. Close enough that we can calculate that risk to reward ratio. If you calculate the difference between here and where my stop was and multiply it by 3, it was just above where the stock gapped away on the next trading day. So that was another reason to get out of this trade, because I was very close to my price profit target and I already had 8.5%. So we're not going to be greedy. We take the money and you take your bat and your ball and you go home. And as you can see, this is exactly what I made in 2 trading days. If it had not gapped away and it continued to move up, I would have been in this trade for a minimum of 3 days. If I had more volume here, I would have been in for 5 days. If the market and if everything else kept moving up, I would have stayed in for 7 days. Okay? So let's move right into some of the indicators. It came on my radar screen here. Here's a huge volume spike. And this is before trade day. Remember, this is where we were, people, right here. This is how it showed up on the end of day scan, right here with this huge volume spike, and the prices are not yet gone. The next day is where I got in on the correction, waiting for it to move up. The next thing I'm always looking at is the money flow. In this case, I'm looking at a Chaikin money flow right here. And we not only have a short-term positive divergence as compared to this pivot point low, we have strong upward momentum, signaling that the real tide of confirmed institutional insider buying was in our favor. This is how we know before the trade took off. The next thing we want to take a look at is the money flow index. Look at this upward momentum of this indicator before. Now, the reason why we're using 2 different money flow indicators, traders and investors, is because where one can't pick up the truth of what's happening, you can be sure that the other one will. And this is crucial because every chart pattern is not the same. So no matter what the chart pattern is, one of the 2, 99% of the time will tell you the reality of what you're looking at. And in this case, it was all positive, ready to go. In isolation, level 1 ready to trade for tomorrow's opening. What's the next thing we want to take a look at? Stochastics crossed from below to above 20. This is a standard stochastics oscillator, different than what I use on the market side. If you wanted to as well, you could have drawn a legitimate trend line here, which was violated at this point before the crossover from below to above, and all this upward momentum before trade day. Our chief scout confirming turning points are legitimate, tradable. Next, what's left? The MACD right here. The cross, signaling that the trend had officially changed, was long before trade day, way back here. And why? Because of the pivot point that was established here. So what you're looking at is a lot of time-tested techniques that myself, as a professional trader, uses every day to analyze and trade single stocks. And last but not least, what I want you to see before we get out of the single indicator presentation is where we were on the exponential moving averages before trade day, and here they are. On the stock side, we're using a 3- and 7-day pair of exponential moving averages, and right here is where the crossover happened before the trade took place. Now, what I'd like you to understand is that the final qualifier in every trade should always be the one that shows you that you have officially changed direction and you are clear 100%, level 1, ready to trade for tomorrow's opening. And in this case, I relied on the paired 3- and 7-day exponential moving averages right here. as you can see. What I'd like to talk about now, a lot of traders want to ignore because they trade stocks in isolation. They may have gone through everything that I just went through, and they're ready to trade this stock. But they miss things. And what they miss is the relative comparison of what they're looking at as compared to other stocks. And when I say other stocks, I'm directly referring to stocks that are within the same group, okay, that are ultimately assigned to that group's parent sector. This is the way to be 100% sure that you're on the right side of the group, right side of the sector. And the market's moving net neutral sideways, consolidation trending up even better. A small downtrend, you can still trade these stocks and make a lot of money. A lot of money, as you just saw. So here we are. I can assure you that there were other stocks that I found that had similar chart patterns within the same group. I can assure you that there were other stocks within the same group that had similar volume levels. And I can assure you very well that the group's price movement was very similar. Here is the actual sector, the parent sector to the group that TKC is assigned to. Here's the price action of the actual group moving up with the market, comes back down, and here we are right here on 9/12, trade day, 13 right here. And what happened? This area right here, market opening, coincided with this previous price level right here. I want you to see this. This compared to this. Prices bounced off it and started to move back up. Did the other stocks have the same setup as the one that we chose? No. Were some already on their way up? Yes. And if the stock doesn't have the same type of indicator formations and it's moving up, it acts as an earlier confirmation because some stocks are tradable and some aren't. And we trade the stocks that are only the true high probability trades when everything is lined up. And you know why? Because the most important thing that I could possibly teach you tonight, all these new people who are here tonight, is that your greatest positional advantage as a trader or investor is patience. You wait for the trade to come to you. You do not chase the trade. This is my golden rule. And the reason is clear. Why would you trade anything else? Because you think you need to? You don't. You can wait and let the trades come to you when everything is lined up and make more money. And why? Because you have the confidence and the conviction to put on a much larger position and make a lot more money because of it in a short period of time. Does everybody understand the profundity, the significance behind that? Okay. This is what I want you to learn tonight. Now, there's a lot of trading systems out there, black box things, a lot of systems that people buy and they spend hard money for, $3,000, $5,000, $6,000, $7,000, $8,000, $9,000, $10,000. And the pros and cons of systems are, there are some really good systems developed by some really good guys, and I know who some of them are because I'm in the marketplace. But most of them are, in many market conditions, questionable. So what happens? You go through this process. You empower yourself. You learn these indicators. You study here. You go through the one-on-one developmental process. You go through the foundations course where we dissect every single thing that you need to land as a professional, real-life profitable trader. And you know what? You become the methodology. You become the system. And what does this do for you? It gives you all the conviction you need because you know exactly what you're looking at. You know exactly what you're doing in the moment when the trade arrives. So it gives you, again, the conviction to put on the position and get out of the on the sidelines, less educated trader or investor, and into the arena of a professional and what we actually do every single day to trade. This is the way. This is truly the way. So again, I got in this trade on 9/12 at 9:38 a.m. and we don't have the time to go into the real-time indicators tonight, but I can assure you that they were all in positive alignment for the next day's opening. My first trade I got filled at 11:30 flat, 3,800 shares. The second trade, when I saw prices start to move up and the intraday indicators were positive, I got at 9:48 a.m. the second trade. I got filled at 11:32 for 9,300 shares because I knew the price is going to move in my direction. And so the combined total of shares, again, was 13,100. And if you divide the fills, you come out with 96 cents times 13,100. And again, I pulled in $12,576 of hard money in 2 trading days. Now, everybody who follows the Inside Market Analysis webinar knows that we are highly profitable. And we go through this walkthrough every single IMA bi-weekly webinar so that you can learn from this. You can use this as a catalyst to truly learn how to become a more profitable trader. So that's the complete dissection of the most recent profitable trade that I have booked out and closed off on. I have one more I just got out of 2 days ago, but we haven't had the time to prepare that. That brought me in another 7% in 6 trading days. So on the next IMA webinar, I'll more than likely present that one as well. So what we're saying here is, regardless as to what the market is doing, regardless as to what the news is publishing, just like you saw, and as you have experienced since August 10th on the market side, we're trading profitably. And why? Because we're following the best indicators. We know exactly what's happening, what our risk is, how to eliminate it, and trade with the real smart money and put the odds all in our favor. I hope all of you understand the significance behind that. So now I'd like to talk a little bit about what we offer here and how I truly believe we can help you. The first thing I'd like to get into here is Metastock's program, the same program you're looking at right now. Some of you use Metastock and some of you don't. Some of you are end of day and some of you are real time like I am on a professional program. If you're not using Metastock, I highly recommend it. And the reason why is because it's backed by a few key things that no other program has. The data feed is Thomson Reuters. And these people go through great pains in order to make sure that data is clean. Now, as a professional trader, before this program, I was using 2 different programs to verify the data as the price is being correct, but I don't have to do that anymore because I know that these prices are correct. And I know that what I'm looking at, I can trade off of. Now, let me tell you, if you use other programs, be careful, because if you have a wrong price and you get an incorrect fill because of what you thought was the correct price, well, annualize those mistakes out and you'll see how it cuts into your profitability real quick. So real quick, on our end here, the Inside Technician, myself, Jeff Kilian, we are an official partner in the trainer category. And we are an official partner in as a reseller. So if you're thinking about using Metastock and you don't, you can log on to my website, theinsidetechnician.com, and go to the #1 IMA webinar tab, which I'm going to show you in a minute, and you can pick up the program at the absolute lowest price. So I'm not going to belabor that point. I want you to see what we have posted on the site. Technical support at Metastock is second to none. They have the kind of people that I wish I had years ago when I first needed to learn how to trade. And the reason is because I never rush over the phone. So you as a new person, intermediate person, time is money. Don't ever forget that. These guys are the best over there. You're looking at the InsideTechnician.com's Foundations course page. This is the most recent happening that's coming up, very special course. And then the course dates are October 10th through the 14th. This course, where the difference lies, again, everything is in a fully transparent environment. This is limited to only 7 people. That's it, no more. To give you the kind of individualized attention that you need in order to gain the knowledge and turn it into actionable intelligence to be able to trade as a professional does. This course is guaranteed, absolutely guaranteed, to bring the beginner up to the intermediate level in a very short portion of time. There's 2 sessions daily, an hour and a half each one, an hour and a half in the morning and an hour and a half long just after lunch. So I know of no course, and everyone who studied here says the same thing. And as noble as we are, I have to say what they say. And what they do say is that they never, ever expected that they were going to get this breadth of knowledge out of 1 week course that had a fraction of the price of what other people charge to actually mentor people. So it's 7 people. That's it. You and I in a webinar environment, and from day 1 to day 5 we go through every single piece of analysis that you need to go from beginner to intermediate level in just a week. Now there's a lot of people who are at the intermediate level right now who've studied here, who have been just blown away by what they've learned from this course, and they are much more profitable now, like Dave Myers, like Eli Hanash, like David South, like Len Cillier, and a couple others that I don't have permission to repeat their name. So we're in the business of making real-life profitable traders. That's what we do. And I know of no one else who dedicates the type of attention to doing that the same as we do here. You can just clearly read the testimonials. So we offer the 3 services, and the first one is the IMA bi-weekly webinar. And this is the best way to get to know us for who we are and what we can really do for you. All you have to do is go to the site, go to the #1 IMA webinar tab, click it, and you can read it, and then go right to the link and go right to the registration tab, and you can subscribe to the Inside Market Analysis webinar tonight. All you need is your name, email address, and phone number. That's it. Click submit, and away you go. Every 2 weeks, you'll be presented in a fully transparent environment, a webinar very similar to what you saw tonight. Only every 2 weeks, things change, and we change with it. So we can present to you the reality of what you're looking at and how to find these highly profitable trades. Tonight, we have a couple of giveaways. And what I want you to know is that here we have a very significant happening. Traders World Magazine has recently published in the June-July issue the most recent issue of my well-received throughout the entire community article entitled The Essence of High Probability Trading. And so everyone who subscribes tonight is going to receive a free copy of that article, and you're going to learn a lot from that. You're also going to receive high-definition screenshots of the trade that I just walked you through. The most important screenshots for you to see, including a few in real time. How I did what I did so that you can learn from that as well. Sign up for the IMA tonight and let us show you how our services will help guide you in the right direction. So before we conclude, I would like to take the time to thank all of you for being here tonight. My door is open to you, and the difference between us, again, is when you finish here, we have an open door policy. You can call, you can email me, it doesn't end after you finish. Every graduate here knows that. When they finished, we've had extensive conversations afterwards. I don't charge for that. And to help troubleshoot them out to make sure they're on the right path. Thanks again for taking your time to be here with us. It's been my pleasure to present to you. This is Jeff Kilian for the Inside Technician, and I'll see you at the Foundations course, July 10th through the 14th, and I guarantee you, I will lead you to the direction of becoming a real-life profitable trader. Thanks. Jeff, would you like to step back in now?
Yeah, thanks, Jeff. That was a great seminar. A lot of things that I hear, and you hear it all the time. Definitely, the cost of education is a lot more, or a lot less, I should say, expensive than the cost of ignorance. So if you've liked what you've had to say or heard today, and you feel like you could use some education, I definitely would recommend Jeff as a resource for that. I would like to say thank you for everybody for coming out tonight. It was very good to have such well-attended webinars, and we really appreciate your attendance and taking out an hour of your day to come and see what we've got to say on a weekly basis. And so we'll see you at the next one. Thanks again for coming today, and thank you for presenting, Jeff. It's always such a great thing to get a very good speaker in here and have a really good content, and it's really appreciated. So with that being said, sounds like my daughter wants to spend some time with me. Thanks for coming, guys. We'll see you next time.